is a money market mutual fund? It's a type of investment where your money is pooled together with other investors' money and invested in a short-term, low-risk investment instruments like the treasury bills, the government bonds, commercial papers. They are really low risk, but because we have a lot of people bringing their money together, you still get some form of money as returns. So it's really very good because unlike your normal savings accounts that could give you maybe 4.5, 6, very little interest on your money, this money market gives you 10, 13, and currently it's been on a steady 20% for a while now. So it gives you like 20% per annum, returns your interest for you every day, but at a 20% rate per annum. Now the 20% is not steady, it's not a constant. The interest rate actually fluctuates, but for the past 6 months, it's really been, since last year, it's really been very, very steady at 20, 21, 18, 19%, just averagely 20% for a while now. Why is this money market good for beginners or for everybody really? Number one, I would say is low risk. So because the money that is put together is invested in government bonds, treasury bills, these are relatively very, very safe platforms. So the return might be very small, not really very small. The returns might be small. It might not really wage against inflation, but something is coming in, and because it's on this trusted government platforms, it is low risk. I mean, we've not really heard that the government ran away with people's money, and we are not hoping to hear today or tomorrow. So it is really relatively very safe. Number two is the steady return. So your money comes back to you daily, right? Even when you're sleeping, the only thing you need to do is to put your money and watch it grow. So it steadily comes back. Depending on the amount of money you have, it will return something for you every day. Number three is the flexible access. So you can actually withdraw your money every day. I know some platforms allow you to withdraw your money on a daily basis. For some, like the UBA or the Stanbic money markets, they will leave you, when you place your withdrawal, within 24 hours you can get your money. And that is really how it differs from fixed deposits, because when you fix it, you have to wait till when you need to pull your money. That's the only time you can withdraw that money. A money market mutual funds is not like that. Number four is that you can start small. Many of them can allow you to start with as little as 5,000 naira. Yes, you don't need millions to start. You don't need to lock up your money. You can just start from 5,000 naira, put it together and start. Any amount of money from 5,000 naira and above, you will be able to start. So just check those platforms and know which one you want to start with. So there are different types of money market funds. They are not all created equally. But one is the government-backed fund. So these ones invest mostly in treasury bills and government funds. They are safer, but they have low returns. Number two is the commercial focused fund. Here they invest in corporate papers and commercial lending. It has a little slightly higher returns than the government-backed funds, but of course slightly higher risk as well. Now the third one is the hybrid funds. It's just a mix of the government-backed funds and the commercial-focused funds. Also have some form of balanced risk, which is always a better option to go for. Usually fund managers publish your monthly fact sheet, so just go online and browse for each of the money market platforms you want to use, find out what their fact sheets are, and get informed before you delve into them. Now, right to where people are really interested in how do you start, you have to check for different licensed fund managers, right? You can check Stanbic IBTC, you can check Optimus, you can check the UBA. Most of them you can do them online. Some of them you can just walk into the bank and ask them for the money market, how to go about opening a money market account, and they'll be very, very happy to show you how to. But if you want to do online, once you have chosen the one that you want to start with, put an account online through them, follow through. Of course, I'll be putting out one very soon. I think I'm going to do the Stanbic IBTC one. Just follow them step by step. They'll also want to know your customer customer. They would also ask you for some documents, some things just to validate yourself and that you're a real person. Then go ahead to fund your account, and then of course you go ahead and start earning your interest. What are the downsides to this? Of course, there are going to be some downsides, and number one is that the returns are not fixed. Okay, I had mentioned earlier, it used to be 10%, got up to 13, went to 18, 19, currently at 20. Anything can happen. It can still, even while it was going up, it was still going down at some point. So it is not constant. But the good thing is that your capital is preserved. It is not touching your capital in any way. So it's just the returns or the interest that you have from the money is what you're fighting with as to how big or how little is it going to be. The second one is that it's not inflation proof. Okay, so if inflation goes up to 45%, God, that beg go. Well, if inflation goes up and you're getting an interest of say 20%, or let's say inflation is at 20% and then you're now getting an interest of 11%, it is still not edging against inflation, right? So, but of course, it is way better than having to just keep your money in the bank and maybe get an interest of 4%. So yes, that's that. It is not inflation proof. Number three is that some of them have hidden fees. So please read the fact sheets. Just search, read, research, and also listen to other people that have done investment. I know that things, some like UBA, they have an interest. So they take some charges, like when you want to withdraw at a certain time, they take they take some fees on your interest. So the amount of money they charge, the interest that you have made on that particular period that you want to withdraw your money. So not really your capital. So just always check, but some of them have some hidden charges that you need to really read and know so that you don't fall victim of something that you don't know. But in general, this is one of the low risk and smartest places you can really put your money, and is why you're still learning for how to use higher and riskier investment platforms. So just go ahead and look at it and read about it and see if it's something you'd like to start, and go ahead and start. Of course, I would always say this is not a financial advice, so make your research, check, and be sure that you want to do this. At this point, have you subscribed to my channel? I mean, I know you're getting some value. Please subscribe, share with your friends, let them know about this channel. We're just growing together. We're just doing life together in the financial world, and I can't even wait because I know we can only get better at this. So it's your girl Sylvia. Definitely more videos like this are coming up. Stay tuned, turn on your notifications, and we're going to keep it real in this page. Thank you, and I'll see you in my next video. Bye.